Good morning, listeners, and welcome to the Trade Talk podcast. This is Shrikant Chouhan from Kotak Securities, Passage Research. Let's start with global cues, as again they are going to impact the world markets. Asian stocks fell as the Wall Street sell-off deepened. US futures pointed higher as gold and WTI, that is crude oil, eased back amid diplomatic efforts in the Middle East. However, if we go through with the bond yield, then it is at 4.96, which is still trading at its highest level, and on the crossing of 5%, it will invite furthermore liquidation in the equity market. So that's the reason we are seeing a lot of cautiousness in the equity markets of the world. Gift Nifty is indicating 30 to 40 points lower opening as compared to its previous close, and the overall setup of the market is also indicating us that the markets are finding difficulties to sustain at higher levels. In fact, on Friday it closed below the mark of 19,650, which was 20 days and 50 days simple moving average support. A closing below the same is indicating us that we are heading towards the next levels of 19,470, 450 levels. There the market has left a bullish gap. Today, if we see the market is filling to the same, then in that case we can expect further more weakness, which will send the market to the 100-day simple moving average, which is around 19,400. Below that, the next level to watch out for would be 19,330, which was the lowest level of the recent sell-off. So the overall pattern is suggesting us that from here onwards, if we see further more weakness in the market, then there are multiple major supports which can in fact help the market to rebound. However, the flows from the global markets as well as geopolitical tension is indicating us that it is not easy for the equity market to rebound sharply and to cross all the important levels. Now on the higher side, 19,700 is going to act as major barrier for the market. On the dismissal of that, we can expect some short covering which will send the market towards 19,850, which is the ultimate resistance in the near term for the Nifty. On the dismissal of that only we can expect bullishness, otherwise we are going to see range bound sort of activity. For the Bank Nifty, 44,000 acted as major resistance. On a weekly basis, again the market closed, Bank Nifty closed below the same. Yes, on the other side, 43,500 acted as major support, and even though there was weakness in the market, the Bank Nifty was consistently trading comfortably above the mark of 43,500. In fact, in the past, I'm going to say since May, June, most of the time 43,500, 43,200 acted as major support for the Bank Nifty, and till the Bank Nifty is not closing below the levels of 43,000, we are going to see some sideways sort of activity at current levels. However, if we see the Bank Nifty is closing below the mark of 43,000, then it will invite further more weakness in the market. From current levels, if we see any rebound, then 44,000 and 44,150, 200 is going to act as major resistance. So there then we need to be careful, and we should look for taking some profit on the long positions. But if we go through with the stock specific activity, then in that case ICICI Bank, which was around 930, 932, is very close to its important support area of 920, 915. So if there is a medium to long term view, then we should look for adding this stock to the portfolio. Also, we like HDFC Life, which is currently trading around 640 levels, and it's a peak of the week. So again, if there is a medium to long term view, then one should look for adding HDFC Life in the recent decline to the positional portfolio. For IT index, it is showing lot of sluggishness, and again there we need to be careful as still we are not seeing any comfort on the bond yield side. We are not going to see any major activity from the IT stocks. So there 100% I'm going to say there we need to be very careful. So broadly we are of the view that we need to follow the levels, and a closing below the levels of 19,450 will be negative for the market. That's all from my side. With this I'm ending today's morning podcast. Thank you very much for listening me.